Ross needs an auditor who knows the industry as well as he does. For Brian, it's whether he can call the partner at midnight.
So?
They both came up with the same name, BDO.
Huh.
People who know BDO.
Hi, everybody. Welcome to On the Money. I'm Maria Bartiromo. We're taking a look at the impact of Boston's tragic events on this country's security infrastructure next. A top former counterterrorism official will join me on what's keeping you safe. One of the toughest weeks of the year for the markets, a correction or a spring swoon. What the volatility means for business and your money. And changing times for the news industry. Is the printed word history? The CEO with a half-century of experience who says newspapers are good business in a digital world. On the Money begins right now.
This is America's #1 financial news program, On the Money. Now, Maria Bartiromo.
Here's a look at what's making news as we head into a new week on the money. We continue to learn more about the Boston bombing and investigation and a wild ride taking place on Wall Street. All three major averages starting the week with the worst one-day decline of the year, followed by more declines as investors worry about a sell-off in commodities and weaker economic reports in the United States and abroad. The moves gave stocks their worst week of 2013 this week. Wall Street's other major headline, a busy week of earnings season. More than 80 companies in the S&P 500 have now reported their first quarter, many beating expectations but showing slim revenue growth. In technology, IBM and Intel fell short on earnings estimates while Microsoft, Google, and Yahoo topped expectations. In banks, Bank of America fell well short of estimates, yet were higher than the same period a year earlier. Citigroup, Morgan Stanley, and Goldman Sachs beat analysts' expectations. Is Apple losing its shine? The tech bellwether dipped below $400 a share this week, just 7 months after hitting a record high of above $700 a share. Concerns that product sales will not be keeping up with a possible glut of inventory there. ExxonMobil once again surpassed Apple as the world's most valuable company this week. And SeaWorld made a splash. The entertainment and theme park company began trading on the New York Stock Exchange on Friday. With an IPO priced at $27 a share, the deal raised some $700 million. Austerity persisting in Britain and Europe, despite forecasts of downgraded growth in the UK and recession in the single currency Eurozone. This coming from the spring meetings of the International Monetary Fund and the World Bank, where I spoke to the former head of Germany's central bank, Axel Weber, now chairman of UBS. He told me about the challenges inherent in a unified European economy, part of the conversation this week.
Europe has vastly different social security systems, pension systems, healthcare systems. If Europe wants to move to more common funding of these systems, which is one of the options at the end of the path, a fiscal union, then they need to harmonize these systems way before they can actually move to a fiscal union. So if you're talking about a common fiscal policy or a fiscal union, it's a decade or more off.
We had the too big to fail hearings in Washington this week. What are your thoughts in terms of how the banks look in the next couple of years? Are they going to be forced to sell assets and separate plain vanilla deposit businesses from investment bank capital markets business?
The issue is going to be, going forward, even if you're well capitalized, can you resolve a bank, even a large bank, if it runs into problems? And there I've seen some recent debates among the regulators, and the mood seems to have swung from having very sophisticated systems of separating these to simply saying, since it will be very difficult, let's just embark on the general road that will ask a lot more capital. So a big part of the new banking regulation will actually be quite substantially higher capital than even what was agreed upon. And the second one is banks need to make sure they can be resolvable.
You've got to believe that UBS at this point is one of the leaders in terms of capital based on Basel III rules, right? I mean, you've been deleveraging for a while now.
We have, and we will, under the new strategy till 2015, reduce our funded balance sheet by a third, from 900 billion to 600 billion. The future of UBS will be one where we focus on what UBS can do best, and that is global wealth management.
My thanks to Axel Weber of UBS. Joining me now for analysis on this week, the news, another name from UBS, Jonathan Galoob is with me. He's Chief U.S. Equity Strategist at UBS. And Mike Santoli is with us, Senior Columnist at Yahoo Finance. Gentlemen, good to see you. Thank you so much for joining us today. Mike, what a rough week. In addition to all of the news surrounding the Boston Marathon, we've got sell-offs in gold, other commodities. Put this all into perspective for us as we look ahead toward next week. What has investors so concerned?
Well, it seems like we're in the midst of another economic growth scare. It's almost right on schedule. Each spring in the last few years, we've had one of these things. And right now, it's taken a little bit of a tone of worried about, these deflationary forces. Inflation expectations are way down. Commodities are suffering because Asia growth is not what we would hope. And, companies reporting earnings that in large part are kind of reaching estimates, but they're not saying they have very strong demand growth. Revenue growth is pretty slow. So it's been a choppy period in terms of looking especially at the outlook for the second half of the year when we were supposed to be getting an economic growth acceleration.
Jonathan, clearly shocking events this week around Boston, the bombings. Now, those bombings were reported Monday during what had already been the worst drop for stocks of the year. Things worsened after that. So as an investor, what impact do these unforeseen tragic events have on confidence, uncertainty, and how do you navigate that?
Yeah, I mean, this is a personal tragedy, and I think as Americans we feel, horrible about this, and our hearts go out to the people of Boston, the families. But at the end of the day, this really is not a market event. I mean, it's possible that we'll find out more that this is part of something more sinister, but it doesn't appear to be. So the market's selling off really for the reasons that Mike laid out. The fundamentals haven't really been there to support the run, but now you are getting a growth scare, and the data is coming in. The economic news is really telling you that things are slowing down a bit, and the market's responding.
So would you advise clients then in that scenario to take some money off the table? Do you want to diversify out of stocks or just look long-term and not worry about these short-term issues?
I think everything really is about time frame. So if you said to me, you're a 2 or 3 year investor, stocks are going to be higher going forward. The pace may be slower than you'd like it to be, but you're fine. If you're trying to pick an entry point, do I think you'll do better in 6 weeks or 8 weeks or 10 weeks from now? Probably. And I would let this flush out this little bit of slowness that we're seeing and then decide when to get back in.
Okay, because maybe we'll see a sell-off, getting an opportunity for investors to come in at lower prices.
And I think you will.
Yeah. And you think we will. So earnings season, Mike, a lot of companies beating earnings expectations, but of course the revenue has been slow, as you just said.
Yeah, sure.
What does the first quarter reports tell us so far about the rest of the year? Any indication from your standpoint in terms of the health of corporate America and the guidance that has been given?
Financially, corporate America is extremely healthy in terms of balance sheets, in terms of how they're running their businesses, very lean. But I do think in the back half of the year, especially the global companies are basically saying, there isn't really a go-to region that's going to be carrying us for the next several months. You saw some warnings among the big companies. Obviously, Europe's back in recession. So I feel like the companies are doing what they can, but profit margins are already so high that they've kind of, gotten all the change from out of the couch cushions and everything to make their numbers. It's not as if they have the organic growth that they can rely on.
Earlier this week, I spoke with Larry Fink, the CEO of BlackRock, the world's largest money manager. And it really is the asset managers, the money management companies that are doing very well because of this market being so strong. But listen to what he said in terms of the backdrop for this market. Take a listen.
Corporate earnings so far, about 85% of the companies reporting exceeded estimations. It's an indication of a stronger economy. If somebody told me we're going to have a 5% correction, I would say look at that as an opportunity to get into the market.
Which is basically what you just said, Jonathan, right?
Yeah, I mean, I do think that Larry's perhaps a little bit too optimistic on things. The companies are beating this quarter, but they're actually missing their revenue estimates. And if you take out financials because of, special, certain things that are specific to their sector, you really are seeing negative earnings growth compared to not the prior quarter, but compared to a full year ago. So things are weak. Domestic companies doing much better than companies with big global footprints.
Mike, what are you expecting from the week ahead? We've got more heavy earnings numbers coming out, big group of companies this week, and we've got the GDP report at the end of the week. Yeah,
I do think actually for that reason it's probably going to be a lot more chop in the market, a lot of two-way action. It's very company specific. I do think that we have to get a little bit of clarity on whether companies feel as if this is just a little bit of a rough patch and we're going to pick up on the back end. I also think there's an interesting wrinkle below the surface of the markets. Most stocks have gone down more than 5% already, even though the indexes were only down less than that. So I feel like the question's going to be, if we actually get through this period of slowdown, a perceived slowdown, whether those companies that are very globally cyclically sensitive are already kind of baking in that weakness, and they actually might be taking the baton for the next phase in the summer, let's say.
All right, we'll leave it there. Gentlemen, great to talk with you. Thanks so much. We appreciate it. Mike Santoli, Jonathan Galoob joining us. Stay with us on The Money. We'll be talking about the security impact following the Boston bombing. A counterterrorism expert, formerly with the NYPD, will join me next. And later, read all about it when some in the newspaper business are shedding staff and pages. The CEO of the 125-year-old Hearst organization is investing in what you read. We'll be right back. The bombing at the Boston Marathon and the subsequent investigation has brought security concerns once again to the forefront for all of us. Joining me now to talk about the event's impact is Mitch Silber of K2 Intelligence, an investigative and risk analytics consulting firm founded by Jules Kroll of Kroll Security, pioneer of the corporate investigations industry. Previously, Mitch supervised the NYPD's ongoing terrorism-related investigations as a director. Mitch, it's wonderful to have you on the program. Thanks for spending the time.
Thank you.
Good to see you. So, after handling counterterrorism efforts for the NYPD, give me your thoughts on what happened on Friday first. Let's go back. That shootout with one of the two suspects, both brothers, then shutting down the entire city of Boston, lockdown. What can you tell us?
Well, what likely happened as of late Thursday is the FBI and the investigation hit some roadblocks. So they weren't sure which way to go, and one route to go is to put pictures out of the particular individuals. And that may, in fact, have smoked these two individuals out, caused them to take some action.
So what's your thought? What is your thought in terms of these two individuals? I mean, we know that this is not necessarily, international terrorism. Is it homegrown? What do you glean from what we know about these two individuals?
I think what we know so far is that they're likely to have radicalized here in the United States, having come here as refugees, in a sense, from the Chechenian conflict. Seems like they are in the Boston area for in excess of 10 years. So it's likely that their radicalization, their turn to violence, happened there. And the questions that we'll be exploring over the next few weeks are, well, what triggered that? Why did they turn against the country that took them in?
Do most major cities have the resources that they need to combat terrorism?
Most major cities are reliant on the FBI and the Joint Terrorism Task Force as really the sole element focusing on terrorism in their cities. New York City has a bit of a luxury in the sense that the mayor and the police commissioner have devoted an effort to have an additional sort of indigenous effort by the NYPD to complement what the federal government doing. So New York is unique, but most other cities, are getting help from the federal government.
What would you say happens next in terms of the way this country, operates differently as it relates to security? I mean, now that we know, what has taken place in Boston, we have zeroed in on the perpetrators and obviously looking for more accomplices. How would things change on a security level for the country going forward now?
I think one of the things that we're going to see is people questioning, once this gets resolved, were there any signs that anyone could have detected at an earlier basis that would have given us a heads up that this was coming? Was there suspicious travel? Were there friends or family that saw these two individuals and the rest of the group potentially radicalize and change? That's one of the things that people will explore, and depending on what the answers are, will affect potential changes in security.
The video and the cameras have been so important to this. I mean, just getting the public engaged, sending in their videos from their cameras and what have you. But there's so much data. How do you sift through it all? What's going on now in terms of the powers that be looking through all of this video and data that we have?
Yeah, it's frankly a big data problem. And what's happening is that you've got analysts who are sifting through all of this digital video on these individuals. There are new tools that have come out that allow you to search for particular criteria, a color of a shirt, a color of a bag, things like that, that might make it more efficient than doing it manually. But this is a place where the government has invested a tremendous amount of investment in two analytic tools that can cut through big data and bring you to anomalous behavior or other types of information that can give you that needle in the haystack.
Is there anything, based on what we know right now, that leads you to understand better the core of why this happened and who's associated with this?
Well, I think understanding a little bit about their ethnic heritage suggests that Chechnya was an important part, one way or another, in their turn to violence. The fact that they didn't put out a statement claiming responsibility and saying in whose name they carried this out, it'll still leave some questions.
Mitch, good to have you on the program.
Thanks so much.
Thank you so much for joining us. Mitch Silber here. Up next, we're on the money. Will the print industry have to stop the presses? How your changing taste is changing the news. Talk to the CEO who says reports of the death of newspapers is an exaggeration. Look for us on Facebook, Facebook/Maria Bartiromo. Back in a moment. As more news and information is delivered digitally, does it stop the presses for the traditional print industry? My next guest says consumers still want to read all about it online and in print. Frank Benak is CEO of the Hearst Corporation. Frank, it's good to have you on the program.
Good to be here, Maria.
You have been at the helm of the Hearst Corporation for 50-plus years.
Well, I've been there for 50 years. I've been at the helm for 28 of those 50 years.
28 out of 50, but you've been at Hearst more than 50 years.
That's
wow.
right.
Congratulations on that amazing tenure at one company. Tell me about what you've seen in that 50-plus years, how the world has changed. What's most striking?
Well, the first time I was CEO, because I've had two tenures actually. One was 23 years, and I retired. I flunked retirement, and they brought me back. And this tenure is 5 years. And the dramatic difference between that first 28 and 5 is something that I often talk about. And the big debate that I hear and that is in my own mind is, what was the biggest change? Everybody wants to know that. Yeah. And I still have to go with television being a bigger change in the world and in our lives than digital. Now, digital may become that. We're still in the third inning, let's say, of the digital revolution.
I would have to tend to agree. I mean, television was a bigger phenomenon than digital.
Worldwide.
At the time.
Right. Well, and still on the impact on our lives. And people are still watching more television than ever before, despite the digital revolution.
Is print media dead?
No, by no means. The way it's delivered is changing dramatically, obviously. I think ink on paper, which is still a part of our business, although a minority part of our business, will be with us as far as the eye can see. But we will be delivering what you and I know as print on iPads and different platforms for as far as anybody can imagine.
But
it's still powerful.
It's very powerful, pardon me. But I think it's really interesting that you're basically doubling down on print, investing $15 million in an actual printing press in Albany, New York.
That's right, yeah.
You own probably the only paper in the world actually buying a printing press at a time when newspapers are cutting back on staff. They're cutting back on editions, some closing down entirely. So who are you trying to reach, and how long will those readers be around?
We still believe that the most affluent and the most educated of the population want to consume print. And many of them still like it the old-fashioned way. Others, the more affluent, of course, have a variety of ways they receive it. They take it at home, ink on paper. They take it on their iPad. They now take it on their cell phone, so that the medium itself is a long way from being over.
Obviously, Hearst publishes more than 300 magazines globally, but your company's portfolio is diverse, $9 billion in revenue last year. You also own BuzzFeed, half of the Fitch ratings agency, and television interests. So tell me how you see the business changing.
Well, part of our success has been the fact that we've diversified. Many of our contemporary companies, remember we're 125 years old, stayed too long at one stand. Our strategy was diversify, become more electronic. That led us to go from 3 television stations to 29 television stations, to launch with ABC, what is now A&E, History, Lifetime, all of those cable networks. We invested in ESPN. So that diversification meant that we were not too reliant on any one product. And so combination of acquisitions and new starts built a company that's today about 15 times maybe larger than when I became CEO and about 30 times more profitable.
And you've got a documentary based on Hearst's 125th anniversary premiering on the Bio channel April 23rd. That's giving the perspective on the life of founder William Randolph Hearst. That's
well, in our 125th year, we asked an award-winning producer, Leslie Iwerks, to do a documentary, and we gave her complete latitude to tell the story the way she wanted to tell it, and she's done a nearly 2-hour documentary that is the history of the company, including the last 30 or 40 years that I've been around.
We'll be watching. Frank, good to have you on the program.
Thank you. It's nice to be here.
Congratulations. What a phenomenal career.
Well, thank you.
And you've seen so much. Frank Benek joining us, CEO Hearst. Up next, a look at the news this upcoming week that will have an impact on the money. And then as we take a break, take a look at how the stock market ended the week. Back in a moment. For more on the money, check out the website otm.cnbc.com. But first, take a look at the stories coming up in the week ahead that may move the markets and impact your money this week. The heaviest week yet for earnings on the first quarter. On deck this week, Apple, Netflix, AT&T, Sprint, ExxonMobil, and Chevron. Also watch for Caterpillar, Boeing, Ford Motor, Procter & Gamble, and UPS, among others. All of those may very well set the tone for the markets. On Monday, meanwhile, millions will go green in celebration of Earth Day. Also on Monday, March's existing home sales will be released, followed by the new home sales report on Tuesday. Thursday is the dedication of the George W. Bush Presidential Center at Southern Methodist University. And on Friday, we will get the gross domestic product report for the first quarter. GDP, typically a market mover that measures the country's total economic output. That'll do it for us for today. Thank you so much for being with me. Next week, we have a special episode for you with the technology leaders who are changing today's economy. I'm giving them a seat at the table.
Trust is the new currency of this economy.
Yeah.
That's a great quote. Trust is the new currency of the new economy. We'll bring that to you next week. Have a great week, everyone, and I'll see you next weekend.
Ross needs an auditor who knows the industry as well as he does. For Brian, it's whether he can call the partner at midnight.
So?
They both came up with the same name, BDO.
People who know BDO.